This new weekly dividend ETF might just take over the investing community. Today we're talking about the Roundhill N100 0DTE covered call strategy ETF. I really like this one so far. It's boasting a 40% dividend yield. We're going to talk about how this fund works, what separates it from other funds, and then we're going to look at how much you would make in dividends or distributions if you were to invest $10,000 today. This is a newer fund. It's only been out for what, a couple months? It started trading March 7th, so still a very new fund, but I am extremely interested. So it tracks the NASDAQ 100, which is really important, which I like because you get some good diversity in it, and these 0DTE calls are very interesting. If you're new to options, it might be a little bit complicated, but I promise I'll do my best to explain it. So what we're going to do now is we're going to look at the website and the fact sheet about this fund and see exactly what they're promoting. Before I jump into the Roundhill investment website, I want you guys to know that I appreciate you guys for watching the video. And if you're interested in more of these kinds of videos, please consider subscribing. That's my quick plug. So let's jump right into it. So why QDTE? Now, I had not heard of Roundhill much before this. I think I've heard the name thrown around, but they have a ton of ETFs. And I'm curious into looking into some of these other ones if they will work the same, like xdte. So I may be doing some videos on those if I like what I see. So the weekly distributions is the main thing that is amazing, plus a 40.66% distribution rate, which is insane. And so the high income potential. I'll explain how this fund works when we look over their fact sheet. This is more so just a quick glance. So they want you to be able to harness the volatility of the NASDAQ 100 to exploit mispricings, which they say. And basically, it's a really unique way that I haven't heard of other funds using. The yieldmax funds don't use this. The Neos funds don't use this. I have not heard of any fund actually using this. So it is really interesting. So let's take a look at their fact sheet. So to explain how this ETF is different. When you purchase a call, 0DTE stands for 0 days till expiration, meaning that you are this is going to expire at the end of the market close the day you purchase it, which makes it extremely risky. And people do this. They love doing this to try and predict what like SPY is going to do. And so what they're doing here is they're writing covered calls on the NASDAQ 100 that will expire at the end of that day. So the NASDAQ typically goes up. So I understand using those top 100 stocks for this kind of thing. But the way that you are able to make so much money with this, and the way that you can actually factor in more gains with a fund like this, is that you are not holding the stock for a long period of time. So you buy it for the day and they still own the stock. So as long as the stock is not called out, they still own the stock and you still make money from what it is doing overnight. And that is the main difference. So normally when you have a stock, you have volatility in the after hours and pre-market hours. So when you're trading options, you don't recoup any of that volatility. But with this you do, because let's say that it goes up 1% each day, but 5% after hours. Well, the calls are all done in the same day. And so once the market closes, you're still holding the position technically through the fund, which enables you to gain whatever it does in the after hours as well. And so that is the main difference with these compared to month-long covered call strategies or bi-weekly. You basically have a lot more potential for the price action in the underlying fund to increase. And so that's what I think is really cool. And so I'm going to read it how they do. Each trading day, the fund will sell a covered call against its position in the index, seeking to generate options income. Daily returns are capped at the sold strike. During the overnight session, the fund will no longer hold any of the options positions, just the fund itself, resulting in full exposure to the index during after hours trading. That's what I love. I think it's really smart to do it this way. And so what they're boasting, an 8% increase in the net asset value since inception. Market price is up 8.1%. High expense ratio. And so this is going to have a very high expense ratio because this is not easy to do. If you are writing a monthly covered call, it would take you a lot less time than writing a call every single day. So it is a very high expense ratio. But with the dividend yield they're pumping out or promoting currently, I mean, that's a drop in the bucket. Even if you remove this from that, you're still getting a plus 39% dividend yield on your money, which is more than you'll ever get in a bank, on any loan, on anything like that. So they talk about all the risks. If you're interested, check out their website. It is really interesting to me, but I am a investing nerd. So what we're going to do now, we're going to look at what this thing has done since the inception of the fund with the dividends, and then we'll check out the dividend history. Using the drip calculator from Dividend Channel. I love this. We're going to chart 10K invested since the inception of the fund. Let's compare it to the NASDAQ 100 itself and see how it compares with just the fund. So the interesting thing is QQQ does outperform this with dividends reinvested and with dividends not reinvested. Now, that doesn't mean that this fund isn't good. It just means that QQQ has been doing really, really well. And so that's the thing. If you are interested in the options side of things, which again can be really tricky, when QQQ is going up really high, it will be less profitable for this fund. For covered calls and for a lot of option strategies, you want the fund to trade relatively sideways and a little bit up, but we've seen some insane returns from QQQ. So that being said, the total return is 8%. And now this is just going back to March. So 8% for QDTE and 11.4% for QQQQ. Now it's what? It's a whole third more for QQQQ, which is that's important. That's not a small amount of money, or 50% more actually. So it does raise some red flags, and I definitely understand that. Now the thing with this is you're roughly about the same with dividends reinvested. No, dividends reinvested, you have a little bit more for both factored in. So very, very interesting. Something to think about with these funds. I love the distributions every single week, but if it does underperform QQQ, it is something to think about. Now let's take a look at the dividend history and calculate how many dividends it's paid out and what the average dividend payout has been. Luckily, Seeking Alpha does it for me, so I don't have to add all this up. But what we can see is the dividends they've been paying out. So this is every week. Remember that. That's why there's so many. We can see it up here that in the last, we'll go to 1 year, around 30 cents, low of 9 cents, low of 14. So that it is all over the place, which is expected from a lot of these funds are all over the place. Yieldmax. The NEOS funds are a little more predictable, but still a very, very interesting thing to note. $4.32. So they have paid out weekly, let's see, 1, 2, 3, 4, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 dividends, which means it's been 4 months. So it's paying about $1 a month. So what we're going to do is in 4 months, we've paid out this much. We're going to multiply this by 3, which gives us about $13. And now what is the current price? The current price of the fund is $45. So it doesn't make a lot of sense how they're saying their dividend yield is so high. Now we're looking at a 13%. So if we divide this by 45.78, and then we're going to multiply it to get our yield. Whoops. Okay, a 28% yield. So they are off a little bit, but still, that is pretty insane. Even if they are only around the 28%, that's still an insane yield. You're still having really good returns from this. And this is not including the price appreciation that we'll see from the NASDAQ 100 in the after hours trading, which is why I love these types of ETFs. And if you guys are new to investing, I've been investing for 10 years. Now, I'm definitely nowhere near an expert, but it is so cool to see all these new ETFs coming out, all these different strategies, different ways to make money in the market. I mean, if you would have told Warren Buffett 5 years ago that there is a solid dividend yielding or distribution yielding of 28%, he would never have thought it possible. He would say it's going to go under. You can't do that over and over and over again. And we don't know if QDTE will be able to, but there are funds that are defying the odds. Cough, cough, CONY has been doing insane. But I just want to note, so 28% yield, we're going to calculate it based off the 40 that they say, because it might be a little bit out of date if the newest dividends aren't factored into the website, because this was quite a jump in the dividend yield. But still important to know, the dividend growth is going to be meh because we haven't had the dividend for that long. And what are they saying the yield is? They're saying the yield is about 10%. So that is not anywhere close. They have it at 10%. I have it at 28%. And Roundhill has it at 40%. who's the best mathematician of all of us? Probably not me, but I'm not sure 10% is going to be anywhere near. I guess only time will tell. What we're going to do now is we're going to factor in putting 10K into this stock and see how it would perform over the next 20 years if the price stayed consistent. So before we do this, I want to remind you guys one more time, if you're interested in subscribing, I do these videos all the time and I love it. And if you want to join the community talking about these kind of funds, maybe learning a little bit here and there, that would be amazing. So your first year, your total return is going to be $4,066 at a 40% on your 10K invested, making your total money $14,066. Now we're going to jump this up to, let's go to 3 years. At 3 years, you are now making $8,000 every single year in just the dividends. This is with dividends reinvested and the price remaining consistent. It's extremely unlikely that it would unfold like this. This is not financial advice. It's simply speculating based off the data we have now and some assumptions on what the price will do if it can at least stay zeroed out. It could do better than this. It could do worse. Only time will tell. Your total returns by this point of year 3 is almost $18,000, and your total money is almost $28,000. So if we go to 5 years, you are now making, let's see, in year 4, you are now making more than your initial investment just in dividends, which is insane. Insane. Your total return is near $30,000, and your total money is about $40,000. Year 5, absolutely crazy. You're now making $16,000 a year. You have $45,000 total gained, and you have $55,000 total. Now, if you have this in a tax-exempt account, you are pulling out all of this $55,000 tax-free, which is amazing. If we go to 10 years, you are now making $87.6 thousand. Absolutely insane. $87,640.11 every single year from the dividend alone, and your total gains are in near $300,000 in 10 years. Crazy. We're not going to go too much higher up because the numbers just go absolutely insane. At 15 years, you are now making $482,000 every single year, and your total money is 1.6. Is that million? It is $1.6 million. Absolutely insane. Let's say you're 30 and you want to retire at 55. So you invest 10K into this and hope that it gets you there. Let's see if it does. Wow. From your $10,000 initially invested 25 years ago, you are now making, is that really $14 million every single year. This is why people don't believe this can be true, because that's an insane amount of money. If the return was this simple, there would be more millionaires. And I don't know. I can't tell you if it's going to work or not. I can just show you the numbers that they're representing right now. Your total gains are $50 million, which is absolutely insane. Taxes on this would be, I mean, you would lose $20 million in taxes. Maybe more if you're in a normal brokerage, because it's important to note you are going to be taxed heavily on these distributions because they are short term. So long-term holdings, you're going to be taxed less. Short-term, you're going to be taxed more. Very important to note. So absolutely crazy. The fund could do this. I'm not going to say it is. I'm not going to say it isn't. At the data we have now, it's looking pretty insane. And you're getting dividends every single week at a near 40% yield, or roughly 30% based off my calculations. I may invest some money into this just to see what it does because I think it's fun and I love getting the weekly dividends. I will be putting this in the $1,000 dividend account challenge for next year, which I'm really pumped about. I already have some picked out, some of these stocks, and our account has been going insane lately. So I appreciate you guys for watching. If you liked the video, that helps me out a ton. Comment what you think. If you think this is possible. To me, I don't see it being possible, but who knows? Only time will be able to tell. Either way, I appreciate you guys for watching, and I'll see you in the next one.